one of America's closest allies just triggered the financial downfall of the US dollar. That's not a theory, it's happening now. In a move that stunned global markets, Japan has just slashed hundreds of billions in US dollar holdings. Quietly, methodically, and with a message louder than any press release. We no longer trust the dollar's future. And the result? A $1.7 trillion meltdown across stock markets, bond markets, and commodities. All within 72 hours. But this wasn't some rogue maneuver. It was a strategic response to Donald Trump's bold ultimatum to Japan. Pay more, obey US terms, or face consequences. Japan chose a third option: exit the dollar game altogether. Is this the beginning of a new economic world order? And if Japan can do it, who's next? Let's break it all down, because the dollar may never be the same again. Global markets are in shock. In a stunning and deliberate financial maneuver, Japan has reduced its US dollar reserves by over $300 billion, initiating one of the most significant realignments in modern financial history. For decades, Japan has been one of the largest holders of US treasuries, a trusted economic partner, a loyal investor in America's debt, and a firm believer in the dollar as the cornerstone of global finance. But now, that trust is visibly eroding. The announcement wasn't flashy. There was no grand speech or press conference. Instead, the Bank of Japan updated its monthly portfolio report, showing a sharp decline in US dollar assets, and a pivot toward gold, yuan, and regional currency instruments. Immediately, markets responded. Wall Street's Dow Jones fell over 900 points, marking its worst two-day loss since the COVID crash. The US dollar index sank below 100, its lowest since early 2022. Bitcoin soared to $82,000 as investors scrambled to hedge against fiat risk. Even more alarming, this wasn't a spontaneous decision. Insiders in Tokyo confirmed that Japan had been planning this move for months. According to leaked communications published by Asia Times, Japan began gradually reducing its US Treasury exposure in Q2, carefully spreading out the sales to avoid triggering a panic, a technique dubbed stealth dumping by analysts. Why the secrecy? Because Japan wanted to send a signal without starting a war, financial or otherwise. The message was simple: we no longer accept unilateral demands from Washington. The rules are changing. At the heart of this shift lies rising frustration over America's treatment of allies, especially under Trump-era and post-Trump pressure campaign. Japan's policymakers are increasingly uncomfortable with the dollar being used as a political weapon, including sanctions, asset seizures, and trade coercion. And then came the trigger: Donald Trump's latest speech in Texas, in which he demanded Japan increase its defense payments, cut all tech imports from China, and commit to massive American agricultural purchases, all while threatening tariffs and troop withdrawals if Japan didn't comply. The reaction in Tokyo was swift and quiet. Sources inside the Japanese finance ministry say the decision was unanimous: begin disengagement from dollar dependency. And so began the sell-off, which, according to analysts at HSBC, could eventually reach 500. This is no ordinary correction. This is a geopolitical earthquake in slow motion. Japan, once considered the West's most reliable economic ally, has decided to chart its own course, and the dollar may never recover its former dominance. Japan didn't just wake up one day and decide to walk away from the US dollar. This decision has been years in the making, slowly brewing beneath the surface, shaped by economics, politics, and fear. Let's peel back the layer. For decades, Japan was the model dollar ally, obedient, dependable, and central to America's financial architecture. As the second largest foreign holder of US debt, after China, Japan played a pivotal role in keeping the dollar strong and stable. So why leave now? Trump's transactional pressure. Donald Trump's foreign policy, particularly toward allies, has always been business first and loyalty second. His recent speech in Texas, demanding Japan pay more for US military protection, abandon China trade, and boost American farm imports, was the final straw. To Tokyo's leadership, this wasn't negotiation. It was economic blackmail, and it shattered the trust built over decades. A senior policy advisor to Prime Minister Fumio Kishida put it bluntly in an off-record comment: We are not a vassal state. We will not be dictated to. This assertive language represents a seismic shift in Japan's mindset, from compliance to sovereign independence, to weaponization of the dollar. Since 2022, the world has watched the U.S. use the dollar system as a geopolitical weapon, freezing Russia's reserves, cutting countries off from SWIFT, and using sanctions like economic nukes. Japan, though an ally, took note. It realized if Washington can do this to rivals, it could just as easily do it to friends who disobey. So Tokyo quietly began hedging its exposure, reviewing foreign reserve safety, conducting stress tests on dollar-based instruments, and eventually expanding gold purchases by 70% over 18 months. The conclusion: diversify, or be dominated. 3. The rise of regional alternatives. Japan has been a silent observer in the BRICS bloc's de-dollarization push, but it hasn't stood still. In the last, it has signed bilateral currency swap deals with South Korea and China, boosted trade settlement in yen with ASEAN nations, pushed for the creation of an Asian monetary fund alternative to the IMF. These aren't headline-grabbing moves, but they're structurally critical. By building up regional monetary tools, Japan is preparing for a world where the dollar is no longer king. And it's not alone. Indonesia, Malaysia, India, and even Saudi Arabia are quietly engaging in similar experiments, reducing exposure to dollar volatility and building backup systems. Domestic political pressure. Japanese voters are also waking up. Rising U.S. interest rates have made Japan's dollar reserves less profitable. Inflation imported via energy markets, often priced in dollars, has made the average Japanese citizen resent America's hold over their economy. Politicians across party lines are now under pressure to rethink Japan's monetary loyalty. Donald Trump's rhetoric has always been bold, confrontational, and unapologetically America first. But his latest demands on Japan crossed a red line, not just diplomatically, but economically. At a fiery Texas rally just weeks before Japan's dollar exit, Trump told the crowd, "We're defending Japan for free. They should pay, and pay a lot more. If they don't, we pull out." He went further, calling on Japan to sever all advanced tech imports from China, increase defense spending twofold, prioritize American agricultural and energy products, accept US-led tariffs on Japanese electric vehicles, and steel. And it wasn't a negotiation, set a risen ultimatum, publicly broadcasted with no diplomacy, no compromise, and no respect for one of America's oldest allies. In Tokyo, these words didn't just sting, they triggered alarm. Japan's leaders remembered the 19 pressure forced them into the Plaza Accord, leading to a real estate bubble and lost decade. They weren't about to be bullied again. A top Japanese MP told Asahi Shimbun, "Trump's tone reminds us of a past we vowed never to repeat. Japan will not be economically colonized." Instead of responding with words, Japan responded with bonds. Selling them, behind closed doors, financial ministries began quietly divesting from U.S. treasuries, not as an attack but as self-defense. Markets didn't notice, until it was too late. Trump's demands were meant to project strength, but they exposed a growing weakness in American diplomacy, the loss of trust even among friends. And now Japan is showing the world what happens when an ally walks away from the dollar. When Japan pulled the plug on U.S. debt, global markets didn't just wobble, they collapsed. In just 72 hours, an estimated $1.7 trillion was wiped off portfolios across the world. This wasn't a currency slide. It was a confidence crisis. And here's who got hit the hardest: U.S. Treasuries. With Japan selling off billions in bonds, prices plummeted and yields spiked. The U.S. government suddenly faced higher borrowing costs, putting pressure on everything from federal debt to mortgages. Global banks, major institutions like HSBC, Citigroup, and Deutsche Bank saw massive paper losses. Banks holding dollar-denominated assets scrambled to rebalance, triggering volatility in bond and forex markets. Asian currencies and trade. Japan's dollar exit weakened regional confidence. Currencies like the Korean won, Thai baht, and Malaysian ringgit took heavy hits, dragging down import-export projections across Asia. pension funds and insurance. European and American retirement funds, heavily invested in treasuries, suffered sharp losses. Some funds are now calling for emergency rebalancing to reduce U.S. exposure. Crypto and commodities. In contrast, Bitcoin soared past $82,000. Gold hit $2450, and oil briefly topped $120 barrel as investors rushed into hard assets and alternatives. But this wasn't just market panic. It was a wake-up call. If even Japan, the most stable U.S. partner, is exiting the dollar, what does that mean for everyone else? This crash wasn't caused by a war. It was triggered by a loss of faith, and that may be even more dangerous. Japan's departure from the dollar isn't just a headline. It's a historic turning point. For decades, the global economy revolved around the U.S. dollar. Now one of its strongest allies has broken formation, and others are watching. Already, South Korea, India, and even parts of Europe are reviewing their dollar exposure. The BRICS bloc is accelerating alternative currency systems, and trust in America's financial leadership is beginning to fracture. The dollar hasn't collapsed yet, but Japan's move exposed a deep vulnerability. The system works only if everyone believes in it. Trump's pressure may have been intended to force loyalty. Instead, it pushed allies to seek independence. What comes next? It pushed more de-dollar, more regional financial networks. The unipolar dollar world is fading, and Japan just fired the starting gun.